Cost of capital, debt, equity, and WACC. To start off, what are the two sources of capital, namely equity and debt? From owners, investors, or stockholders, that is what equity is, while from banks, lenders, and other financial institutions, that is what debt is. So then, what is the cost of capital? Cost of capital refers to the financial resources in order to finance a business in its startup or beginning, operations or during, or expansion or future plans. There are two types of cost of capital, namely cost of equity and cost of debt. Percent dividends or expected return is what cost of equity is, while percent interest charge is what cost of debt is. Then, what is WACC? The weighted average cost of capital. Well, WACC is the weighted average of all costs of the sources of capital, namely debt, preferred stock, common stock. Well, this is the elaborate formula of WACC. It may be intimidating and crazy to look at, but it's pretty easy. K stands for rate of return. KD is for the debt. KPS is for the preferred stocks. KCS is for the common stock. T is the tax rate, while W means the weight. WD is the weight of debt. WPS is the weight of preferred stock, and WCS is the weight of common stock. To practice this formula and help you exercise as well, let us use some practice exercise. Compute the WACC for Medical Commonwealth Corporation or MCC. Last December 2016, Medical Commonwealth was considering to acquire a set of new medical equipment and wanted to estimate its own WACC as a guide to the cost of capital for the acquisition. MCC's capital structure consists of the following: debt, 100 million, preferred stock, 50 million, common stock, 250 million, with a total of 400 million as the capital structure. So then MCC contacted the firm's investment banker to get estimates of the firm's current cost of financing, and was told that the firm were to borrow the same amount of money today, it would have to pay lenders 8%, the firm's tax rate with 25%, preferred stockholders demand 10% rate of return, and common stockholders demand 15%. With this data, we substitute it to the formula of WACC: 0.8 for KD, 0.25 for tax, 0.25 for WD, 0.10 for KPS, 0.125 for WPS, 0.15 for KCS, and 0.625 for WCS. With this formula, we have come up with this table, with the source, weight, after-tax cost of financing, and product. Each source has its own total. Debt has 0.015, preferred stock 0.0125, common stock 0.09375. That is a lot of numbers, so let's just total it up. With a total WACC of 0.12125 or 12.125%. And that is your WACC. It's simple, easy, and it may not be that intimidating anymore.